Hey, what's up, guys? This is Rose Gonzalez with Living in Northern California, and I'm so excited for you guys. Today, we have Eric Berg. He's going to talk about the new down payment assistance program that's really huge right now. Hey, Eric, how are you?
Good, Rose. Thank you so much for having me on this call. So really excited with this new program that's come out.
Yeah, so tell us a little bit about it. I know this has been kind of the hot topic right now, and
Yeah,
I would like to get a little bit more deeper into what it really is and what it offers and who it can help.
awesome. So CalHFA, the California Housing Finance Authority, which has historically provided first-time homebuyer programs, including down payment assistance or closing cost assistance, has come out with a new program called Dream for All. And in my opinion, this is the most impactful down payment assistance for first-time homebuyer program that we have seen in a long time. So essentially, how it works is CalHFA will provide a 20% down payment assistance. So you get a mortgage for 80% of the value of the home. CalHFA provides down payment assistance for 20%, and the
Wow.
sum of those two mortgages is 100% of the value of the home. So in a basic sense, a buyer provides the closing costs. The two loans provide 100% financing on the home.
Okay. And
The
interest
Yes,
do they pay interest or anything towards this 20%?
it's awesome. What's amazing is the 20% down payment assistance has no payments due and no interest that accrues. It is paid off in full when a home buyer sells a home, or I'll just say refinances a home or transfers title. There is an option to refinance the home one time, but think of it as when somebody sells a home, they'll pay back the 20% down payment plus a relatively small portion of their equity growth. So it is an equity, what they call an equity share program. The home buyer keeps 80% of the equity growth. CalHFA takes 20% of the home equity growth. And in contrast to other equity share programs that we've seen, this is super favorable for buyers.
Yeah. What are like the advantages for buyers? I mean, I know there's different down payment programs, and this has been something that's been very big recently. What are the advantages to the buyers right now then?
The biggest advantage with this program is it goes right to the heart of the matter for many home buyers, which is monthly affordability. The fact that somebody's not paying payments on 20% of their financing makes the cost of a home much lower compared to if they're paying monthly payments on the full amount of their financing. So, much lower monthly payments compared to not having down payment assistance.
Okay. Oh yeah, that's huge right
Yeah.
now, especially
Yeah.
with interest rates. Um,
Yes.
is there any addition to like their closing costs? So I know I've heard that some down payment programs have like a 1 or 2% fee towards closing
Mhm.
costs.
Mhm.
What does it look like for this
So
program?
there's different iterations on how the structure of this can work. I mean, there may be options for, depending on the offer, for, perhaps for the seller to pay for some of the closing costs. There are some additional costs when closing costs, excuse me, when somebody buys a home using a program like this. But in the context compared to somebody paying their own down payment and everything else, this, in our opinion, is the cheapest way to get into a home.
Yeah.
So what
Oh,
we do with our clients is we try to help them, turn over every stone, look at every possible way to get into a home with the most affordable payment and the least amount of money out of pocket.
okay. And does this work for just anybody, or who can use this thing?
Yeah, great question. So CalHFA sets the parameters for who's eligible. Generally speaking, it's what they deem to be first-time home buyers. So that would be somebody who has not owned a primary residence within the past 3 years. If somebody owned a home 10 years and sold it 10 years ago and hasn't owned a home since, they're considered a first-time home buyer by CalHFA. So as a part of our approval process, we go through, reviewing who is eligible, but generally speaking, got to be a first-time home buyer. It's got to be a primary residence, and there are minimum credit score requirements. They're somewhere between 660 and 680, depending on the income for an applicant. And there are some restrictions in terms of what income is allowable. Somebody making $1 million a year, for example, is not going to be eligible for down payment assistance.
Yeah.
However, the maximum income limits, which are set per county, are very favorable. So again, this is why we feel this program is really going to be impactful.
So I know, would this be something like with income wise? I don't know if you guys have had a chance to calculate this because I think this just came out on Monday.
Yes.
What would be like a purchase price that would fall into place with this as far as like income goes? Like, are you looking at people who can buy a home up to like 800? Are they reaching $1 million, or we don't really know that yet?
Yeah, that's a great question. It depends on the county, but what we're seeing is that the ideal limit, excuse me, would be like under 900,000, because when the loan amount, if a borrower is eligible, when the loan amount goes above $726,200, there's additional fees for the loan, and it can start to get a little bit cost prohibitive. So we really think that the sweet spot is really with a cap of around 900,000. It doesn't mean somebody couldn't go higher, but it may be better for them to maybe look at another program if they are.
Got it. And obviously this depends on like how much debt they have and all that stuff. So we'll make that
correct.
Yeah.
Yeah.
And how does like the interest rates look in comparison to like not having the down payment program? Because I think there might be variations with like regular loans and then versus ones with down payment programs. Are the rates higher?
Yeah.
A lot or a little?
Yeah, that's a great question. So generally speaking, with many, not all, but many first-time homebuyer programs, you might see higher interest rates than what are standard, because that's the way that they kind of subsidize the help, the down payment assistance. Here with CALHFA loans, CALHFA sets the rates. CALHFA is not a lender, so they don't actually offer the first mortgage. Their approved lenders do. We are one of them. But CALHFA sets the rates. So on their website is the interest rates. And this is as of today, for a standard income qualifying loan for this program, it's 6.375% on a 30-year fix. So that is right where market rates are. So it's very competitive. Yeah.
Yeah, because I know I've heard a few different programs where like it's, a little, it is maybe like 1% more on the program. So that's actually great. Okay.
Yes.
Awesome. Is there anything else that you want to share about this program that people may have concerns about that I forgot to ask you?
Yeah, no, a couple things, just a couple other details or highlights is that this is probably not a forever program. It is funded through the state of California, and they've got funding from what we've read for a couple of years. So I think once that funding runs out, it may or may not be around afterwards. So this is not a program that is just kind of open-ended. Okay. And we feel that with
you want to get in now.
Yeah. I mean, they've had other down payment assistance programs that have run out of funds before. So that's because of the impact and popularity of them. So this is I would say it's a temporary program. And another thing is, like, if we ran a couple models, like if you look at somebody who buys a home, uses this program, and let's say they sell their home in 10 years, they have 10 years of no payments on a second mortgage. That's gonna like, when you look at the cost savings, that's gonna absorb a lot of what the future equity that they share with CALHFA. It's gonna absorb a lot of that. So really, in the end, buyers are giving up a little bit of equity in the long run, but they're getting a massive savings in terms of cash flow for that whole period of time. And again, that's really what the heart of the matter is here.
Yeah, for sure. I mean, I think it's such a great opportunity for people to get into the market.
Yes.
And so I've been hearing a lot of people talking about like rate buy downs and stuff. Will this type of program allow any seller credits to go towards rate buy downs or anything like that?
Yeah, temporary buy downs are an option here in case buyers want to request a seller to pay for their reduced interest rate.
Okay. And is it like a buy down on rates, or can they do like that 2-1 buy down?
Yeah.
Any type of down? Okay.
Yeah, temporary buy downs are available. Permanent buy downs are available.
Okay, perfect. And if you guys don't know about the buy downs, we have videos on that. All right, cool. Eric, if people want to get a hold of you to get more information about this new program that helps buyers get 20% down, how can they get a hold of you?
The best way to get a hold of me is on my cell phone, and my phone number is area code 510-334-8847. They can also email me at Eric, that's ERICK, .bird, BYRD, at ccm.com.
Awesome. All right. And Eric, do you only cover certain parts of the area? Do you cover all of California? Who can reach out to you?
Yeah, we cover everywhere in California, and this program is available in every county in California.
Awesome. Cool. All right, guys, I hope you found this video helpful. We just wanted to kind of summarize this new program to hopefully help someone out there get into a home this year. And yeah, if you guys are interested in this program, either reach out to us or reach out to our good friend Eric, and we'd be happy to help answer any questions that you guys have. And if you're new to our channel, make sure to give a little love. Come on, Eric, give a little love to that subscribe button, and we'll catch you on the next video. Bye, guys.